So, hello everyone. I'm quite privileged to chair today's discussion about making funding models work, seizing hydrogen investment opportunities. Hydrogen, as you're probably aware, presents a kind of a massive economic opportunity for the UK, with the potential to unlock over 12,000 jobs and up to 11 billion in investment on 2030. However, for hydrogen to reach its full potential, we must address the funding and market challenges in order to get the hindered investment. So join us alongside our kind of three wonderful panelists as we explore how we look about barriers of private investment in hydrogen, how public-private collaboration can bridge this gap, how effective structures, financial structures such as blended finance, and public-private partnerships can help mitigate that. What are the mechanisms for unlocking public funding and integrating into private investment models, and how government initiatives can help better align with private sector investment? Thank you, Greg. Allow me to introduce myself very quickly. My name is Athanasios Grammatikopoulos. I'm working in the capital the last 5 years, leading the climate action strategies, cities, transport, and built environment. And now I'd like to introduce the esteemed panelists. So let's start with Andy.
Thank you.
Yeah?
Nice to meet you. Is the mic working? I think so.
Yes.
Yeah, thank you. Good afternoon. Nice to meet you all. So Andy Thompson, I'm Portfolio Director with the Thames Estuary Growth Board. We're a public-private partnership. Our main role and focus is bringing growth, investment and economic development into the Thames Estuary region. So that's going from the east and southeast of London right across to Kent and Essex. My own role and focus, and hence on the panel today, is in the energy sector. So we've been working on some really interesting energy projects, looking to bring in with investment projects, new partnerships, and growth into the region. Hydrogen is certainly one of the key areas: sustainable aviation fuel, heat networks, biofuels, and private wire, smart grid, of other areas. But hydrogen, for the last 2 or 3 years, we've really been pushing, and happy to talk more. Thank you.
Brilliant. Thank you so much. Arnold?
Thanks, Athanasios. Arnold Dutoit, investor. We work across energy, aerospace and transport. The conversion of those three, I guess, brings me to the table. Hydrogen's a question that we've been handling for the past 2 decades. So happy to be here, happy to talk about the private side.
And Steve, please.
Thanks. Yeah, Steve Beel. So I'm the Chief Executive of Freeport East. Freeport East is one of 12 Freeports, and basically, I think the best way to describe Freeports is that fundamentally we're all about place. So we are places where we're trying to grow local economies, attract inward investment, and so on. And we have a range of tools which are very familiar to local authorities and regeneration specialists and so on in terms of actually how we go about doing that. Freeport East is then based around the ports of Felixstowe, Harwich, and Ipswich. So we've been doing a lot of work around green hydrogen in particular, and with quite a kind of big emphasis on transport uses. So 5,000 HGVs a day going in and out of Felixstowe Port. Obviously, the biggest container vessels in the world, cool at Felixstowe. Biggest railhead in the UK is at Felixstowe as well. So kind of lots of kind of heavy transport uses as well as other local industrial applications for hydrogen.
Brilliant. Thank you all so much. So we start with the first question. So what do we think are the main barriers that you notice preventing private investment in hydrogen? How can kind of a public-private collaboration can help bridge that gap between public funding and private capital? And what, if any, are the financial structures that you've seen as a second part of the question that would be most effective in attracting that kind of a private investment? So we start with you, Andy.
Thank you. Yeah, I guess a couple of things really. I mean, certainly at the moment there's that whole chicken and egg scenario which has certainly been at play for the last few years, of where people want the hydrogen right now but they can't necessarily get it. A number of reasons for that. There's certainly challenges which is quite topical at the moment about land and planning, and certainly projects we're working on at the moment, there are challenges around the availability of land and also competition with other energy projects, with data centres, with housing. So we're all competing for the same amounts of land. Obviously cost is an issue as well. And I think another one is that there is funding models to incentivise production, but not necessarily decarbonisation. So I think more can be done to help on the decarbonisation side of things. There is small pockets of funding available, and we have worked with Innovate UK. There's certainly more incentives to help encourage industrial operators and others to help decarbonise and to look at hydrogen and early stage trials as well. And I think at the moment, most of the projects we're working on are long-term projects, so perhaps not necessarily next year or the year after, but they're further down the line. So there is a gap and there's demand at the moment for those short-term trial projects where companies can step in, perhaps with 3 or 4 acres of land, and to get things moving quite quickly. And there are companies out there who can do that, and we're having those discussions with companies now. There is funding available, as most of you know. The half funding rounds is certainly really beneficial. It's good, but there's been delays. Delays, as you as investors will know, that's difficult, it's costly. So there are positives but challenges, and I think decarbonisation, incentives for decarbonisation is one thing that we can do both from the public and private side. We could do better. Yeah.
That's brilliant, thank you. I mean, Arnold, could you give us a little bit light from the investment also kind of aside from your end?
Sure. So it's always easy to talk about the challenges. So I thought I'd start with some of the positives. There's quite a lot of projects moving on from pilots, getting quite a lot of funding. If you look at the production of steel, ammonia sectors, we've got maritime production and facilities using hydrogen already and taking on significant funding to move out of pilot stage and into large commercial sectors. So there's a lot of positive news on the larger scale. But I guess as a technology investor, the other side of what we do, that is where the big challenges sit. And so looking at sort of supply chain investment, there's positive news around technologies, hydrogen tangential, that we're adopting. But I think the news from across the pond and wiping out sort of the climate change agenda from the US is making things a little bit difficult on that innovation investment side. But you will find a lot of companies who are successful in taking, sort of technology companies taking capital on to date, even in the last couple of months. I think there's a couple of companies in the room here that have actually taken some private capital on recently, have followed on from commercial projects. So using the principles of project finance, you find some of these applications and commercial projects really kind of shining a light on it, moving away from that risk of technology-only investment, because it's such a long horizon. So there's a lot in that, but I'm happy to unpack it.
Brilliant. Steve, from your perspective, can you give us an example or some examples?
Yeah, well, so I guess I was going to start with, I mean, I think the bigger picture, as many people understand, is that a lot of new hydrogen applications are part of a much bigger energy transition that is going on in the UK and elsewhere. And inevitably, that creates a lot of complexity. So there's still a lot of people out there with a wide range of technology choices, challenges around economics, particularly switching from old models to new. Plus, and I think that actually from a government perspective, and having worked in a previous life at Ofgem and designed models for how we kind of support new investment, let's say in grids in the UK, the challenges in the hydrogen sector are a step beyond that, actually, in terms of how government also support the right choices and support the right developments. So I think, I agree with Arnold that I think, where we are in Freeport East, there's lots of really great stuff going on, but it is a challenging sector because actually those fundamentals. I think Andy and I both kind of come from a background where we are kind of place-based initiatives that are trying to play a convening role. So a lot of what we've been trying to do at Freeport East, and we've kind of talked about a green hydrogen hub, and a lot of that is about trying to kind of help any investors into the area understand local dynamics better, understanding where the offtake opportunities are, what the market looks like, and accepting that actually I think we're all craving the kind of big announcements, the big investments to be made, but actually a lot of it is incremental. It's about building capacity and understanding in local authorities, in local participants, where we are, particularly the logistics, transportation companies, many of whom are struggling with choices between, let's say, going down the hydrogen route or electrification. And so playing that convening role, I think, is about trying to layer a kind of baseline that investors can then build on. So we've got a green hydrogen hub. Another thing that we're working on is with East Midlands Freeport, which is basically at the other end of one of the busiest transportation corridors in the UK. We're kind of working with them on a green freight corridor. And again, that's partly about trying to address some of the system challenges where you've got lots of different parties and stakeholders that kind of need to make decisions of their own, but try and give them a framework around which actually they can move forwards together.
So I think you both touched it, but I would like to hear more about what steps can we take actually to ensure that these models are more sustainable, as you mentioned, for the long term. I think short term in hydrogen is not like something for our benefit. So what are those steps? Can I start from you now, Steve, if that's okay from your side?
Just say that again, sorry.
Yeah, no problem. What steps can we take to ensure that these models, those funding models or those kind of convening ways of collaboration are sustainable for the long term from your perspective?
Well, I think in the context, let's say talk about place, and I guess Andy might have kind of different perspectives on this because of what the government have done around kind of regional funding. But I think actually those that are kind of place focused, whether it's free ports or investment zones or other or kind of Thames Estuary Growth Board, etc. I mean, actually, I think the longevity of support for those organisations that can kind of play that convening role is actually quite important. I think we have a long-term sustainable model or funding model that kind of supports us, which is important. But obviously, then it's about us supporting others as well. I think when it comes to what government can be doing, I think so. As we were joking beforehand, if I had all the answers to all the questions on this, I probably wouldn't be here showing all the information with everybody in the audience, right? But
Indeed.
But I think that I think for innovators, government have got to find ways of, or ideally, and other agencies would find ways to provide actually longer-term consistent support to those that are building innovations. So I know there are people in this room that we work with, and we see them, obviously utilising quite a lot of their capacity, bidding back into funding from CPC or Innovate UK or directly from DFT or whatever it might be, when actually I think we can recognise that they are on a journey that we should be supporting. But with a consistent funding model, not probably where they are constantly bidding from one thing to the next. And obviously, as is always the case, it slightly diverts them in terms of their own strategies because they need to kind of align with the funding pots. I think then I think with, so HAR1 I think has been positive, and HAR2, one of the challenges with those government funding models is clearly where you don't have consistency of timelines. We've got a couple of projects in our local area that we know are waiting, and HAR2, that is months and months of standing consultants down, bearing the cost of keeping those projects running whilst you're waiting for those processes. I think ideally, we need to find ways that government can support the downsides of projects, but also incentivise the upside so that we can maximise the benefits of these projects when they come forward, which is probably kind of going on a bit too long.
No, absolutely. I mean, Arnold, from your perspective, also that supporting ecosystem, how do you make that happen? Like, what do you think is like, what can we make like to ensure that happening, like to bridge that hydrogen, basically gap to supporting the adoption as we move forward?
So I've got to be very careful that I speak on behalf of the public sector because I'm not the public sector. But just to touch on what Steve mentioned, I think that consistency of public support, whether it's funding or providing assets to build these kind of commercial projects around, success will depend on an integrated ecosystem at the end of the day. Hydrogen alone won't deliver that kind of decarbonisation. So we've got to try and think about that kind of, I don't want to call it multimodal, but kind of more, put it this way. If there's a follow-up step to where it comes in venture in hydrogen, it would have to be commercial projects that we need to try and get funding for. So if there's support from the public sector on that front, it would be subsidising commercial projects, the same way they did the kind of space race back in the 1969s. It's not that I was born back then, but I've heard that apparently that's when governments work together. So that kind of integrated ecosystem potentially could bring application and technology together around sort of a public asset and potentially form commercial projects that don't just deliver returns for the public sector, but give that commercial runway in an isolated environment to some of these technology companies and some of the larger companies who have challenges to solve. So for me, I think the next step is treating an integrated ecosystem is easy to say, but the steps to take towards an integrated ecosystem is actually the fragmented ecosystems that we need to also try and consolidate is a bigger challenge than we think it is. These ecosystems are usually designed around certain regional challenges, and regional's great. It's never going to give you the scale to demand that private investment to join in. So this is a great opportunity commercially for the public sector to step in. Don't you look at subsidising some of that support? But these things can be done on a case-by-case basis. I still believe that there should be some sort of follow-on structure given to all stages of technology and corporates within the UK. I think it's join us on the seed stage, Series A, you bugger out the UK and go somewhere else. And then you come back at Series B just to join in the big corporate and sell it back to your original foundation for a higher price is probably not the model that we want to see continue. So to give people a framework, so to speak, of next stages is probably the right step, and then plugging those ecosystems into that framework could drive some consistency.
Andy, from your end?
I think also about being clever about government projects or big projects. Example I give is Lower Thames Crossing. Hopefully that will go ahead in May of this year, but they've been quite clever about procurement and looking at decarbonising the supply chain. So in this instance, using hydrogen to replace fossil fuels. And they've gone to the market, actually at the moment, they've gone to the market to procure green hydrogen. And that's a good example of how you can be quite clever. It's government funding, but we can be clever about this and align with policy, and at the same time help stimulate and act as a catalyst for bringing investment. And that's one project. The other one is Cadent and their Capital Hydrogen project, which goes from Steve's area in the east right across to East London. So they've got 19 industrial off-takers. They're doing a pre-feed with Jacobs. What they need is hydrogen production, so that's where we're playing a role to introduce. So if you've got Lower Thames Crossing, you've got Cadent, you've got two big long-term projects there. I think it's also recognising points of difference. Parts of the UK are very different, as you mentioned, so play on those strengths, recognise points of difference, but also there is collaboration. So Freeport East is not far away. You're working with similar companies as we're working with. It's important we do join together and make these projects more appealing to investors who want a big cluster of opportunities. Let's not be siloed. Let's look at this as a national opportunities, but recognise there are differences. So we're very different from Teesside, for example, and Teesside's going down a different route in terms of their hydrogen opportunity.
Okay, brilliant. And I think, again, Steve, you touched upon that, but how can we believe, what kind of a government initiatives be better connected with private sector investment to scale up hydrogen technologies and infrastructure? What is those kind of a probably government-backed hydrogen infrastructure funds or something? Arnold, can I start from you, please?
So you're asking me where the funds are from the government to like this?
And how you better connect with the private sector.
So again, there's so many different ways I can talk about this, but I think I'll talk to hopefully the technologists in the room.
Yep.
So companies early stage in this marketplace is probably everything up to Series A. So I think I speak for them to say that accelerator programs are probably not the places where you'll find that particular traction. But talking about ecosystem sort of consortiums being brought together, there's a lot of work being done by grants. I don't think that they're promoted enough commercially. So finding the government or access to government funding probably needs to start finding your local region, then finding a particular challenge within that region. And if you have a estuary running through your particular region, if you pick on London, there's a great opportunity there to look at transportation challenges faced by bigger cities, addressing hydrogen as being part of that supply chain. So you go back to that supply chain narrative to make it easier for investors to understand where the kind of balance sheet asset value sits. And then building a commercial model, unless you can find it through a consortium, building a commercial model together with other technologists, public sector, and also probably large corporates or even educational institutions, and wrapping that commercial project into something that's investable. So, in the traditional sense, build versus buy. And I think if we change that mentality, then we start to bring that kind of integrated ecosystem thing that I mentioned before back to the front page. But commercial growth is going to be small at the beginning, but if the framework is international, the commercial framework is international, great reasons for export, great reasons for bringing other local governments or central governments in different parts of the world together, and then suddenly you start to bring together that kind of finance credit export team to kind of support you on those larger scale commercial projects. But the initial start's going to be find a patient capital partner who's willing to play a bit of play against the cadence of the current government to try and find those pockets of public finance. I mean, Connected Places Catapult is a great place to find sources of that, but there should be more of that. So, yeah, kind of split between talking for the technologists and talking for the investors.
Okay, thank you. Steve, from your end, what do you think, and how that kind of a role continues to advance, despite those challenges, with the government's initiatives?
So I think to answer your question one way, two things I think government could do. I think one is, this doesn't just apply to hydrogen actually, but I think applies to a number of sectors in the kind of net zero sector, let's say. Yep. Government are controlling an awful lot of the policy levers, obviously, of which direction some of these sectors go. I think they obviously have a lot of influence and insight, in a sense, of what sectors can go in which direction. Offshore wind is another one we see where that's the case. I think finding ways of, and actually if you create that policy framework and actually you say, and you're telling the private sector, this is the direction it's going to go, and this is where we're going to get to in 2050, then frankly they themselves have created the business case in which they can probably invest a lot more of their own money into some of those objectives. I think the other thing, just in terms of way government uses funding models, I think I've not thought about some of this stuff for a while because this is not always in my day job, but it's kind of bringing back to me kind of past experiences. National Wealth Fund and similar versions we've had of that in the past, they are, in a sense, they are too commercial for many of the things that we're trying to do at the early stage. But we have this big gap from grant support, which is obviously limited for various reasons. I think this is kind of in things that I've seen done in the past which have worked really well. I think it's about government or others with kind of public funds available being willing to be extremely sub-commercial on the downside. So you are covering the downside risks to enable investors to get going, but actually you're being very commercial on the upside. So you're really aiming to take your fair share of the risk that you've taken, right? And so as I say, going back to what we've done with electricity interconnectors in the UK with a cap and floor model is really about essentially taking a significant proportion of the downside risk, which creates an enormous appetite to invest, but you're taking a big share of the upside. And I think generally, I'd say it's not just about hydrogen, but I think in a lot of sectors in the UK, we don't have that kind of approach, and we're slightly caught between there's not much money for grants, and therefore there's lots of people who will be going into government right now and they'll say, go and speak to the National Wealth Fund because they are the answer, and they are just not. They are nowhere near that kind of risk appetite of where we need to go. So I'll go for my hobby horse, but that's the kind of, I think that's the kind of where we collectively need to be.
Thank you so much. Andy, from your perspective?
Yeah, I agree. I mean, the National Wealth Fund, you're right, more advanced projects. So they invested in Estuary recently with Barclays and others. So there is funding for hydrogen projects, but they've got to be more advanced and already through proof of concept and not early stage. What works well, I think it's tricky, but certainly consortia. So on a number of occasions, we've put good consortia together with UCL and others, bringing in public, private and academia together, but bidding, to your point, bidding on pockets of Innovate UK funding. So we're all competing for that funding. But that has worked well in bringing different groups together. I think it's a good way to bring innovators together to then allow them to work with experts from academia, to work with industry, to look at what is Tate and Lyle, what are you trying to do in terms of decarbonising your plant in East London. So bringing those groups together certainly helps. I think we've played a role in also at the early stage doing the heavy lifting in terms of feasibility reports and taking a hit on the funding and getting that early stage stats, data and intel, which in turn is used by companies but also investors. So we've played a role, not a little bit of money here, but we've played a role in trying to fill a gap there as well, which helps because companies don't often have that money. They don't want to put money into those reports, it's expensive. They'd rather do that elsewhere, put the money elsewhere. So there's a role for being clever about where's the gap and where do we play a role, and probably it's the same with Steve, and I guess you've done similar work, Steve, I'm sure. We've done reports of DMV and Arup and others, but it's important work because it helps us map out where the opportunities are. It's helped us formalise clusters. It's helped us identify where we see demand in construction, in maritime, and in other sectors, and small pockets of industrial decarbonisation. So I think that's a role. It's points of difference and being clever about where you can play a role, I think.
Thank you. Brilliant. And then as a final kind of a quick fire chat, like what is or what you think is the major opportunity at the moment, or what you see in the hydrogen investment? If you had like one or two, shall I start with you, Arnold?
Well, not just because Andy's here, but we have this phenomenally underutilised asset running through our capital at the moment, and I think there's a lot of movements happening within smaller subsections of transportation within the city. Food markets moving. This is the kind of thinking that I guess the larger institutional funds will already be thinking about because it's policy-led, it's very regulatory. Bringing some of that knowledge of how they view that ecosystem down to the kind of technology level will probably make it easier for some of these companies to self-help themselves a bit. But if you look at that, the river and the opportunity around transportation and the underutilized version of that story, how do you commercialize it? How do you turn it into an estuary that actually delivers goods or parcels for the food sector or the cold chain? Then there's an instant opportunity for a commercial project for riverside alternative fuel production. Riverside obviously being something that is massively scalable, so you don't have to worry about the scale of the economies when looking at hydrogen production on the riverside, but you can use it as a test bed and a framework to then put across larger rivers all over the rest of the planet who are all facing exactly the same problem. So sometimes it's putting the problem statement, which is very commercial, into a context where it can support things like hydrogen. And I think therein you can find a sort of private equity version of private investment that can diversify that portfolio enough to carry the cost where the other costs can't be brought up yet, and play a slightly longer game. But that's systems-based thinking.
Okay, thank you so much. Steve, from your perspective, what is the major opportunity in the hydrogen market?
So I'm not convinced I'm the best person to answer this, but however, I think from in terms of what I see, and actually, great people who work in our organisation and with others that are much better placed to answer the question. But I think the whole segment around kind of maritime fuels and interaction with maritime vessels, and I think what's going on in and around the ports is, I'd say, I think we've probably kind of barely scratched the surface in terms of what can happen in that sector. And I think, so certainly for us, we've got Felix there and Harwich, and I think just the opportunity we've got to put together the right types of collaborations and partnerships that people can work together and build the solutions for the future. I think that's kind of where the big opportunity we would see that I think is really exciting. I know there are people in the audience today who are speaking tomorrow who will be able to kind of elaborate on that much better than I can. So.
Andy?
Yeah, absolutely. Certainly the maritime one, thank you. That's a good one. And the ports, obviously. Aside from that, I mentioned about construction, so with Lower Thames Crossing one is a good example. We're already working with companies who are providing hydrogen to the construction industry that can build and evolve. Industrial decarbonisation, there's companies like Tate and Lyle, there's cement companies, there's food manufacturing processing companies we're working with, and there's some really good, exciting, big projects which we're working with just to get the land and deals on the land there. But certainly, yeah, I think there's maritime, as has been mentioned, but construction, potentially long-term, hopefully. It'll be interesting to see which route the HGV sector goes down, obviously with ports on ourselves and major routes down to the ports. That's an interesting one. We know companies who want to provide hydrogen for that sector, but there's also battery storage and debates. So that's an interesting one. Transport is the one to keep an eye on, I think, longer term as well.
Okay, thank you so much. I can probably touch upon, I have, I think, a minute for one of the slider questions. How do we play in the UK pension funds, public and private, to unlock further investment into hydrogen? Arnold, do you have a kind of a view on that, or I can...
Well, it's pension funds. I mean, you're going to be restricted to something that's commercially viable at that point. So turn revenue, prove that commercial traction, show your supply chain integration. That will unlock it, but that's easier said than some of the companies in the room. I think I'll pause there, but moving away from that funding model, I think stick on the things that will move the needle to cost. So look at storage, look at solutions like you just mentioned, Andy. Look at transportation, look at the different modes, but then focus on the bits that are holding that back. So, and you have to watch the news to watch the dangers around storage of hydrogen. So that's a sideline project, but I'd say pension funds won't look at that necessarily.
Maybe I'm thinking of sort of infrastructure, long-term big infrastructure, which links to perhaps a cadent or something which is a 20-year project which needs substantial infrastructure, new pipelines. Yes, there might be a link there with a pension fund. I can see that. And transportation, storage potentially. Yeah. But not as you mentioned.
Sure.
Yeah.
Brilliant. Thank you so much. So I think we are now concluding. So as we conclude, let's remain optimistic about the future of the hydrogen economy. I think we have a massive potential to revolutionize kind of various industries and drive the investment for sustainable economic growth. And let's continue to collaborate and innovate towards that kind of a cleaner future. thank you. Our actions today obviously shape the world of tomorrow. So thank you so much for your insights and the contributions that you have. And thank you so much.
Great. Well, thank you.